Hello, everyone. This is Alan with this subject here, standing up to the IRS. Standing up to the IRS. So, what to do when you get, let's say, you get an audit notice from the IRS, or perhaps just an unexpected bill. So, I would say for smaller problems that you're fully able to understand, and you can try to communicate with the IRS. But when it's a larger issue and you feel that you're over your head, it's always recommended to work with a professional. There are three types of professionals that can help you with these matters, particularly representing you before the IRS. And those are enrolled agents, certified public accountants or CPAs, as well as tax attorneys. So those are the three that you can go to for support in these matters. Now, what are some of the cons of going at it alone without a professional? So number one, it takes a long time. Oftentimes, it's kind of these kind of matters are prolonged, and you're waiting to hear back from them and so on. Maybe you send them some information and then they need something else, etc. So that is all taking time from you, from moving forward with your business or spending time with your family doing the things that you enjoy and love to do and are the things that will carry you forward. And then number two, you're out of your area of specialty. Among other things, I mean, this it might be really stressful, and it can it costs you a lot more at the end of the day than hiring a professional. And then number three, you might say or do the wrong thing. So that's gonna bring you more time lost, money wasted, and in general, just problems compounded. Now, what about working with a professional? What are some of the pros? So, number one, IRS auditors and collectors, they prefer to work with professionals. This makes their job easier. When hiring a professional, you don't have to face the IRS most of the time. Professional will do it for you. And then, the professional, they know taxes. So there's a higher likelihood that you're gonna get the best outcome. You know, prevent prevent the IRS from getting money that doesn't belong to them, that shouldn't, that stay in your pocket, in your bank account, potentially saving you thousands or even tens of thousands of dollars. Okay, and I want to get into kind of the basic, some tips around this area when it comes to audits, when it comes to getting bills from the IRS. So, filing your tax return. What are the consequences of not filing? So, it is a crime not to file when you owe taxes. Okay, so that's a key difference there. When you file but you can't pay, you won't get criminally charged, although you will get penalty and interest from not paying, but it's not a crime per se, it's a civil matter. So, what's the suggestion here? Even if you can't pay, please file your taxes. File your taxes whenever you owe, even if you can't pay. Then you can figure it out later. You can catch up, and you can work with a professional to help you with that. And okay, so how long should you worry about not filing a tax return? So when it comes to criminal charges can only be brought within 6 years of the due date of the tax return. However, civil charges, they have no deadline, so penalties and interest keep running if you owe the IRS a tax return. Now, the IRS policy is to not go after non-filers after 6 years of the due date. So, in essence, don't worry too much about that. But if the IRS might have the tax return against you, even though in terms of criminally or in terms of pursuing that is what I mean here. Let's say that you haven't got any kind of notice from the IRS for that particular year. That it's been more than 6 years of the due date. If they haven't said anything, or hey, you owe us this tax return, then you can set your mind at ease because it's not their policy to go and pursue it, right? So you can just deal with let's deal with the 6 years, 6 years close to where I am right now, right? Okay. Now, here's another thing. It's always better to file before the IRS contacts you. So even if it's been, let's say it's been a year or more that you haven't filed, it's never too late. The IRS has a policy of not criminally prosecuting those who file before the IRS takes that action to contact them. So be on guard there. Always do that first, even if you're late already on filing a tax return, but you haven't been contacted by the IRS, then do that proactive step. File that tax return. Work with a professional to get that tax return filed, so that the IRS is gentler. They'll often be gentler when collecting from voluntary filers than from non-filers that they've caught and contacted. Okay, and then last point in this subject, don't worry about starting to file after not filing for prior years. So, okay, even if you haven't filed, let's say that you know that you were supposed to file, XYZ years, maybe for the past 3 years or the past 4 years, you've had to file. But that's preventing you from, let's say, because I haven't filed, if I file my tax return for this year, maybe you might be afraid that it's going to trigger something and the IRS is going to find out about all the prior years. That is not how the IRS computers are set up. They're not set up to automatically check for missed prior years. And the reason for this is the IRS doesn't want to discourage non-filers from starting to file. So don't be discouraged. Just start to file even if you have prior years, right? If you have prior years that you haven't filed, you can start. Now here's this criteria for the IRS. How does the IRS choose who to audit? So the IRS has computer programs like the discriminant function, so DIF for short, and that's actually a numeric value they score you. There's also the UIDIF, the unreported income discriminant information function. This is a computer program which scores people looking for high expense to low income ratios. The IRS is looking for people that are living beyond their means. That's essentially what's going on here. Too much expenses compared to how much income that you have. So let's get into an example. Let's say you claim mortgage interest and real estate taxes deductions of $45,000, but you have an income of $55,000. That would mean you're living just on $10,000 a year after your home taxes and financing expenses. And that could be a red flag for the UIDIF computer program and the IRS, right? So the IRS is saying, okay, we're looking for people. We don't believe that you could be living off just $10,000 after those deductions. So we're gonna look into what you have going on. That's essentially what it is. Then, however, don't try to claim less deductions. You should always claim the deductions you're entitled to, uh, even if there's an increased chance of audit. If you have nothing to hide, take then those are just the facts. Maybe you had a very very bad year. You had some money saved up. You paid those expenses, and you just had very little income that year, right? So even if you get audited, you can show that uh, everything is good, and you should have no issue there. Okay, well, thank you so much for listening, and contact me for more info. Here's my contact information. If you have any issues with IRS audits, or maybe you just got a tax notice in the mail and you're wondering why that is, feel free to reach out and we can help you out. All right, thank you, and have a great day.